Powell knows that demand for goods is very high. He knows that people are spending without taking down a lot of debt. Those are both good. Most importantly, he thinks the sources of inflation could abate on their own. Shortages ending, stimulus running out, rent abatements winding down, COVID going away. So he'd rather wait and see that than start tightening. You know what it's called, what he's doing? There's a word for it. It's called prudence. I like prudence, especially when it comes to your money. I think there are a lot of grizzled financial veterans who can't believe their eyes right now because they're so used to the Fed operating in a completely different way. Powell doesn't want to operate that way anymore. He thinks we can have strong job growth and strong spending without causing too much inflation, something, by the way, we didn't see in 2019. In other words, Powell believes we can have some key lime pie and have a decent size, but not too big piece, smaller piece. If that's the case, then I think you should simply stay the course, maybe using this decline to buy some high-quality stocks, especially the industrials, right into the teeth of a downturn we anticipated here with the help of Larry Williams. With the Fed taking itself out of the equation for at least 6 months, maybe longer, the industrials have a lot more room to run. By the way, I include the technology stocks with the industrials. The problem right now is that the experts, from the economists to the reporters who follow the Fed to the hedge fund managers who trade off the Fed's moves, see, they just can't seem to grasp that Jay Powell just isn't one of them. Never mind that he was a private equity guy. He's like no other Fed chief I can recall. Powell actually learns from his mistakes. In 2018, he listened to the inflation hawks and spoke glibly about the need for 3 rate hikes. That blew up in his face. He quickly had to change course. Since then, he's approached his job with a sense of humility. He reiterated that today. He knows that it's hard to predict what the economy will do, so he wants to err on the side of a strong labor market, even if it means we have a little more inflation. Yet Powell's different. He isn't the Tin Man Fed chief like his predecessors. He has a heart that's very hard for money managers to gain because it's unprecedented. They're used to Fed chiefs who say, the economy's getting real good. Let's make it really bad. Let's hurt the working man. Powell just won't do that. For my whole adult life, the Fed had a zero-tolerance policy toward inflation, but it viewed elevated unemployment as a necessary evil. Powell has flipped that around. He has a zero-tolerance policy toward high unemployment, and he views inflation as a necessary evil.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.